Hello, I am Mi-yoon from the Department of American Cuisine. Today is May 8th, and here's Mi-yoon's stock news. Today, without any major changes, I am Mi-yoon, keeping an eye on the sentiment of United States stock investors. Today is Mother's Day. Back when I was in school, I remember that every time Parents' Day came around, we would make carnations, and I still have those memories. Back then, I remember there were a lot of people selling carnations in front of the school, and the students didn't hesitate to buy them, even if they were a bit expensive. So on Parents' Day, there were a lot of kids walking around with carnations pinned to their chests. These days, it seems less common, which makes me a bit sad. I'd like to take this opportunity to express my gratitude on behalf of all the parents who are watching this broadcast, as well as my own parents, and also to the elders and everyone else who might be watching. Thank you so much, and I hope I can say thank you again in person someday. Now let's get started with today's Bing2 News, which we've prepared especially for Parents' Day. Today as well, I'm joined by Kim In-jung for the weekend broadcast, so I think we should move on to the main topic right away. Still today, many of our subscribers have left warm and sincere comments. I'll make sure to read them all and share them with you. I'm someone who uses the nickname Muljeo Hakjong. I always listen to your show twice and look forward to it every day. The Chief Executive Officer of Palantir promised to read about 10,000 weeks, but I had to read it like this. I ended up reading 100,000 weeks. Even so, thank you for always listening so attentively and enthusiastically. I wanted to leave you this message of gratitude. Thanks to you, I was able to correct the parts I got wrong. Hakjong, thank you for your kind words. And as you can see above, Miju Nim is the first person to leave a comment using the identification outsider. Every day I watch your videos in detail while having a cup of green tea. It's one of my small but certain pleasures. Most of the stocks you invest in are related to artificial intelligence growth stocks, but are there any value stocks related to artificial intelligence that you would recommend? As far as I know, most dividend-paying stocks tend to have slower price growth compared to growth stocks. Thank you for your recommendation. I can't make any recommendations myself. I will try to solve the difficult parts through simple research so that you can understand them easily. According to Mr. Awatsai, if you look at the long-term results within the S&P 500 over the past 50 years, you'll see the outcome. In fact, industries that pay dividends have historically recorded higher net returns than non-dividend paying industries. These are those companies. Especially when the market is adjusting or in a bearish market, they show strong performance. So, if you look at the performance overall, they tend to show relatively strong results. In the early stages of an economic recovery, they tend to lag behind. So if you look at it this way, stocks that don't immediately respond or react quickly, but instead receive adjustments and then rise later, tend not to perform as well in the early stages of a recovery. However, growth stocks tend to show better results. For reference, dividend income, when you include investors, accounts for about 31% of the total income of the S&P 500. The other 69% is from stock price appreciation, allowing investors to earn returns. Look at it this way. However, if you only look at the pure increase in stock prices and exclude dividends, and you calculate it this way, among the 500 companies that make up the S&P 500, the sectors that do not pay dividends tend to record higher stock price increases. Historically, when comparing stocks of equal value, returns were similar regardless of the amount of dividends paid according to statistics. In other words, when all other factors were equal, dividend payout had little impact on returns. The average annual stock price increase was 11.6% for non-dividend stocks and 11.2% for dividend stocks, meaning non-dividend stocks had a slightly higher increase. However, if you look at the total return, dividend investors actually made a big difference. Over the past 48 years, dividend stocks recorded a total return that was 47 percentage points higher on average than non-dividend stocks. So if you only look at the stock price increase and ignore dividends, even stocks that didn't pay dividends performed well. The point is, if you include dividends, you can clearly see that dividend-paying stocks have provided much higher returns for investors over time. Now let's briefly address the questions from viewers. The stocks listed below are my personal picks, and I selected them with the help of artificial intelligence. Among these stocks, I've sorted them once based on the proportion of their sales that come from supplying to major companies. The stock with the highest dividend is International Business Machines, or IBM with a dividend yield of 2.7%. The stock with the second highest dividend yield is Qualcomm at 2.54%. Next is Texas Instruments, also above 2% at 2.24%. In fourth place is Accenture with a dividend yield of 1.95%. The fifth is Micron Technology. TSMC has a dividend yield of 1.59% and next 1.23%. The Japanese stock is also Micron Technology. Broadcom's dividend yield is 1.18%, Micron Technologies is 0.77%, and Vista, the seventh top pick, pays 0.62%. Salesforce, Micron Technology, and Meta pay dividends of 0.61%, 0.57%, and 0.36% respectively. This summarizes the key points. And there are some parts that stand out even more. Here are the stocks I mentioned earlier before we talk about dividends. These are the stocks I introduced as artificial intelligence dividend stocks, and there are a total of 12 stocks. If we just highlight a few indicators here, I think it would be even better. First is Paycom. Paycom is better the lower it is, but what does this indicator mean? In the middle of net profit, you use a few percent to pay dividends, so if this number is low, it means there is room to increase dividends in the future. That's how you can look at it. For IBM, the payout ratio is 65.17. If the net profit is 100,000, 165,000, one is used to pay dividends. Therefore, the ability to keep dividends affordable in the future is very limited, as you can see. On the other hand, TSMC is not even at 5.02%. Meta is at 7.90%, 8.93%. Customer relationship management is at 15.7%, 19.14%. ASML is at 21.93% and 22.28%. Therefore, these types of stocks are already using most of their available cash flow to pay dividends, so the possibility of significantly increasing dividends in the future is very low. You can understand it this way. Now, how much the dividend has increased over time is also a very important part. In the case of companies at the top, like technology, the average dividend growth rate over the past 3 years has been as high as 77 to 96%. Microtechnology, SN2O and Broadcom have raised their dividends by 15.31%, 14.77% and 13.2% respectively on average over the past 3 years. Vista and Microsoft have maintained dividend growth rates of 12.47% and over 10% respectively. Now let's take another look at the 5-year average. ASML is the best here, showing an average annual dividend growth of 21% over the past 5 years. Broadcom also did well with 13.63%, Vista with 11.58%, and Microsoft maintained a growth rate of over 10% during the same period. This is how it looks when you check the numbers. And the years of growth column here shows how many consecutive years the company has continued to grow its dividends. That's what this figure means. IBM hasn't missed a single year in the past 25 years. They've continued to raise their dividends every year. Second, Qualcomm has also continued to increase its dividends for 21 years straight. Microsoft has done so for 20 years and Broadcom for 14 years without missing a single year of raising their dividends. So, you can say that these stocks are the most stable dividend stocks among artificial intelligence-related stocks. Now, let me summarize the characteristics of United States stocks for you. Let me show you the S&P 500 chart. Yesterday, Apple and Google both went up, but even so, the overall market didn't do well. Overall, it was a good market with a strong upward trend. Recently, Google has been showing this kind of clear contrasting trend, so I'll explain separately why that's happening. The market trended up yesterday, with the Korea Composite Stock Price Index climbing to 2,654.67. Upward momentum stocks surpassed 40% in historical performance. The volatility index also continued to stabilize, staying at 22.90, so overall, volatility is not extreme. Therefore, the market atmosphere is quite stable. The supply and demand index has risen to 57, indicating the supply-demand gap has nearly vanished, and the market now favors buyers. The max score history provided by ChoiceStar has also risen to 52, so it continues to maintain a high level. Today is Thursday. On Thursdays, the results of the American Association of Individual Investors survey are announced. It's the result of a simple question, and this is how you should look at it. So, after 6 months, do you think the United States stock market will be higher or lower compared to the current price? That's the simple question this survey is about. There were a lot of sentiments. Last week, only 20.9% said the United States stock market would go up, but this number has risen to 29.4%. On the other hand, the percentage of investors who expect the United States stock market to fall has dropped from 59.3% to just 51.5% in 1 week. So, we can see once again that the sentiment in the market has improved a lot over the past week. Next is the put-call ratio, which is a leading indicator. Recently, all three major indices have risen, and the put-call ratio has also increased significantly. This year, NVIDIA has performed the best, and just yesterday, it rose an additional 3.1%. Now it's up about 20% in just 1 month, showing very strong performance. Bitcoin rose 2.7% again, reaching $99,700. A slight increase more could push it to $100,000. Bitcoin rose by 2.62% for the third time, surpassing $43,000 in a strong rally. Immediately after, 2.36%, NextEra Energy, 2.05%, Amazon 2.00%, MicroStrategy 1.78%, AMD 1.76%, Meta 1.62%, Credo Technology 1.59%, Trade Desk 1.49%, Palantir 1.49%, Celestica 1.43%, TSMC 1.31%, and 0.32%. Yesterday, most sectors closed lower, but there were some notable exceptions. First, Talon Energy dropped by 1.45%. The reason for Talon Energy's decline was due to Vista. That's how you should see it. Uber fell by 2.54% yesterday after announcing their earnings before the market opened. The decline was due to the earnings results, which is how you should interpret it. Just highlight it so it's easy to see. Let me show you here first. It's a miss. So, annual growth was 13.8% and sales did grow, but it was still not enough and couldn't meet the market's expectations. This part is the most negative. However, overall, Uber's growth trend has continued. The number of rides and drivers, we can call it the number of entries, it recorded 30 million rides, an 18% increase from the previous year. The number of monthly active users increased by 14%, and the number of active users who use the service several times a month also increased by 3% during this period. The total reservations amount, which is the revenue companies receive after deducting fees, has also risen. So, putting aside the commission, the important thing is how much our consumers are actually spending overall. This is about the total amount of payments they are making. This amount increased by 14% compared to the same period last year, reaching $42.8 billion. And if it hadn't been for the exchange rate, we would have seen an 18% increase, which is a significant growth rate. Sales hit $11.5 billion, a 14% increase from the same period last year. Without the exchange rate effect, growth would have been 17%. Operating profit rose to $1.2 billion from $1.1 billion last year. A year ago, operating profit was less than $100 million. However, improved margins have led to a significant increase in operating profit. Uber's short-term net profit grew by $1.8 billion due to increased equity investment valuation in its stock holdings. Adjusted earnings before interest, taxes, depreciation, and amortization rose by $1.9 billion, a 35% increase year over year. Adjusted earnings before interest, taxes, depreciation, and amortization. Rather than actual sales, it shows a trend of increasing from 37% last year to 44% this year compared to the total amount of contracts. Moreover, the company's operating and free cash flow stand at $2.3 billion each. Overall, the numbers were very good. As you can see, they weren't this good before. The total expected amount is projected to be $45.75 billion to $47.25 billion. If that happens, it means we can expect growth of 16% to 20% compared to the same period last year. So overall, the actual earnings were solid. The problem was that first quarter sales couldn't keep up with the market consensus, and they couldn't record a surprise. That's why the stock price dropped sharply, to sum it up. Besides that, Bistro's minus was 3.66%, Innodate's minus was 4.54%, and Alphabet's drop was more than 7%. The reason why Alphabet dropped so much is something I'll explain in detail in a moment. First of all, Bistro also announced its earnings yesterday, and that's why the stock price fell by 3.6%. So now we should take a look at Bistro's earnings results as well. As you can see, last year's sales rose 28.9%. Despite that, if you can't keep up with the market trend, Bistro's stock price will inevitably fall, which is what we're seeing here. I'll just briefly go over the key points. For first quarter 2025, Avito recorded sales of 1.24 trillion, won a 53% growth compared to Q1 last year. That's positive. And if you look at the breakdown by sector, the power generation sector recorded $1.56 billion. The sales sector and the consumer sector recorded $1.84 billion, showing stable performance across all sectors. According to the third point, the 2025 adjustment aims to maintain earnings before interest, taxes, depreciation, and amortization guidance as is. It is possible to go from $5.5 billion to $6.1 billion. The current cash flow forecast remains unchanged at $3 billion to $3.6 billion for the full period, as shown here. And they also announced guidance for 2026, saying that it could reach around $6 billion to $6.5 billion. Compared to this year, the outlook for next year has significantly improved. That's the current situation. Diversified power generation assets and nuclear power programs, which are being secured through advanced contracts, will form the foundation. So they lock in prices and sign a lot of contracts in advance. That's how they operate. In 2025 and 2026, they have plans to hedge and trade at least 20 terawatt hours per year in the main market. We will continue to buy back shares and pay dividends. That's what they're saying. Chairman Taeyang Kwang of Chaside is also investing $700 million in energy storage. It's a future-oriented industry, that's what they said. Even so, if you want to evaluate it and see how I want to evaluate it, the content of artificial intelligence Jeonryok Soo-hyo-ju's speech is not impressive at first glance, so it's a bit disappointing, but that's how I'm evaluating it. So that's how I see it. So in a way, the earnings results of typical utility companies were boring, and I think there were probably a lot of investors who felt the same way. So as a result, it's very possible that some disappointed investors sold off this stock, causing the stock price to drop. Next, we should focus on Google's performance. The company recently announced strong earnings from its advertising division. Recently, Google's stock price has risen by more than 7% after its earnings announcement, and at one point it even surged close to 9%. So let's take a closer look at what kind of news caused Google's stock price to plummet and explain this part in detail. Bloomberg's article reported that Apple is considering adding Google's Gemini artificial intelligence as a backup option, which is the issue with the article's content. Eddie Q was mentioned by name in the article. Eddie Q said that artificial intelligence search engines will ultimately be replaced by foundational search engines like Google, according to experts. On Wednesday in the United States, Alphabet and Apple stocks moved in opposite directions. If you're wondering why Apple fell, it's because Alphabet is entering Apple's mobile phone default field. The reason for this is that, in order to search on Apple, Google is set as the default. The Google search window is the default, and a significant portion of sales comes from here for Apple. Therefore, such revenue could potentially disappear. Therefore, Apple and Alphabet's stock prices are moving in the same direction, as you can see here. And then there's another editor-in-chief. After that, Apple's Safari. Safari is now a browser. Here they said that options like Open Artificial Intelligence Perplexity and Anthropic, among other artificial intelligence services, will be added as search options. Now, they're saying that the era of searching only through Google is over. Well, and there's another important decision to be made. If we talk about Edge again in April, they said that the number of searches on Safari decreased for the first time. So the number of searches kept increasing, but for the first time in history, the number of searches through Google actually decreased. If you look at it this way, that's what happened. Now, they're saying this is due to the spread of artificial intelligence usage. So why is this important? As of 2024 Google searches and the share they have, Alphabet accounted for about 56.6% of total sales. Over 50% of Google's revenue is generated through search. So, search has been the main source of revenue, and this revenue source has been at the top for a long time. While future growth is possible, the potential for sales decline is also rising, not just sales increases. By the way, this news was unexpected breaking news. Search is rapidly being replaced by artificial intelligence and chatbots, a change that was expected but is happening at a very fast pace. Personally, I'm a bit surprised by how quickly and suddenly this news came. And based on the recent earnings results, there was no clear indication that Google's search engine would be completely replaced by artificial intelligence search. In just one quarter, Google's search and other segments recorded sales of $50.7 billion, indicating a nearly 10% growth compared to the previous year, if the trend continues. And as for Google's management, Google's Search Artificial Intelligence Summary feature, what this means is, when you search on Google now, a summary appears at the top. Because of this feature, 1.5 billion users every month are experiencing strong growth. That's the explanation. But after announcing this result, a rumor quickly spread in the industry. In the end, searching with artificial intelligence chatbots is inevitable. The market experienced this kind of shock. Let's now examine Google's current position. There doesn't seem to be a special solution. After reading this article, I kept thinking about it, but I couldn't come up with a valid solution. In the end, it seems like the old paradigm is just continuing. Search is free right now, but all the other services cost money. So even Google, which has been offering free services, might eventually have to switch to a paid model. I personally think there may be no choice but to move from free to paid. But the question is, in terms of financial resources, can Google's capital surpass GPT? And there are a lot of competitors, but in reality, Google's search has been a unique existence, almost a monopoly. Can they maintain that monopoly position in the chatbot era? I'm wondering if this part will become someone's exclusive domain. And also, if you look at the history of the tech industry, companies that were doing well in the existing market rarely succeeded when a new innovation emerged. For example, if you look at the digital versatile disk sector in the past, the leading company was Blockbuster, but they failed to adapt to the transition to streaming services. That's why Netflix emerged as the number one company, and it's not just them. If you look at the history of handphones, which many of you probably know well, the leading companies were Nokia and Motorola. But when the transition to smartphones happened, Apple became the number one company. So, when there are a lot of existing top companies, it's hard for innovation to break through. But when innovation does break through, the number one company can become a completely new company. This is how we can try to predict the future. In the stock market, where many people are investing in Google, there was a lot of anxiety and news spreading. And after that, there were many warnings about Google's investment prospects, and people were told to be careful. On the screen, you can see a chart displaying the recent movement of the Nasdaq index alongside me. But if you take a closer look, it's the Nasdaq index. From the moment the market opened yesterday until just before the close, it stayed at minus 0.72%. And then right at the end, it suddenly surged. So, why was the market in the negative all the way until just before closing? And why was the atmosphere not good until about 3 o'clock? I'll try to explain this part in detail. This is Paul Jiang. I saw a face I hadn't seen before. Powell's facial expression during the press conference revealed nervousness and uncertainty, which was uncharacteristic of him. His nervousness was directly visible this time upon close observation. The Federal Reserve's decision-making body for monetary policy, the Federal Open Market Committee, has increased the benchmark interest rate for the third time in a row this year. And then Chairman Jerome Powell gave a briefing. The government's fiscal policy, especially the expansionary fiscal policy, could prolong the situation where the Fed is simultaneously pursuing high employment and price stability. I'm interpreting this situation. What does this mean? Yeonjun's goal is twofold. First, to maintain complete employment, and second, to ensure price stability. So the problem is that there can be situations where these two goals conflict with each other, right? Employment may decline while prices increase, making it challenging to simultaneously achieve both objectives. That's because originally, if employment falls, you need to lower interest rates, but if prices rise, you need to raise interest rates. So right now, the dollar's value is low. Why is that? Because stagflation doesn't restrict its value. That was a rather neutral explanation. Now let me briefly explain what happened after that, so you can understand it better. We can't be proactive. That's because we don't know what the right response is. There is too much uncertainty about the scale of the relationship, the scope, the timing, and the duration, so we can't even predict where the trend will go. That's why we can't take any action. This is what was said. As a result, after this year, there are cases where the dollar could strengthen, but there are also cases where it might not. We're watching various scenarios. He said that he cannot confidently say that the economy is on a solid path. There was an expectation that interest rates would be cut at least once this summer, or even 2 or 3 times this year. That was the general outlook. In a recent meeting, Jerome Powell suggested that interest rates may not be reduced in the latter half of the year. So, in the market, there was a comment that could dampen the mood of optimism. That's how you can see it. That's the negative part. There is uncertainty, but the economy is still doing well. The hard data is strong, but the economic data still shows resilience. That's one interpretation. He said that the real economic impact from the interest rates has not yet been clearly reflected in the data. There were many concerns, but no concrete impact has been observed yet. At the June meeting, the Federal Reserve members are expected to release a new economic outlook, the summary of economic projections. The dot plot will also be included here. So it was not easy to predict how this year's expected rate hike would change. Since we will announce the dot plot in June, please wait until then. That's all I can say for now. The point is, investors are uncertain about whether interest rates will go down this year or if there will be one or several rate cuts. Until we see the dot plot in June, it's uncertain. Therefore, we can say that the greatest uncertainty in the stock market is being caused by this. Requesting more attention for one side over the other in advance won't work. If the economy grows significantly or if inflation rises, then we will have to clarify which actions we should take. But until then, it's not clear yet. The Federal Reserve can respond swiftly to situational changes, but the Federal Open Market Committee will not act preemptively. They will observe the results before taking action, as stated by them. There is no appropriate tool at hand to resolve the supply chain bottleneck, so we do not have the means to solve this issue right now. That's what they said. The previous inflation that was intensified is not being seen anymore, and the current inflation is in a relatively low range, they said. This is a transliteration of Hamadiro from the United States. In my opinion, the sharp rise in energy prices will once again put pressure on the Federal Reserve. This means that President Trump recently raised questions about the Fed's interest rate policy again. So in case of a promise, I was listening carefully. So even though he was pushing his own agenda, the United States economy was still affected. He planned to pass the responsibility to Chairman Powell. If Powell didn't lower interest rates or did it too late, causing a recession, he could blame Powell. That's why he pressured him in advance. That's how you can interpret it. But Chairman Powell didn't just sit back and take it. Chairman Powell responded firmly, stressing that the Fed's decisions are based on hard data, not political pressure, and they will only respond to the impact of policies on the real economy. He maintained this position. He reiterated that the United States economy's fate hinges on changes in trade policy, not the Fed. The Fed stated it would adjust its monetary policy based on the impact of trade policy changes, not the policy itself. This was their explanation. So once again, the ball is in President Trump's court. Now, President Trump will have to complete the negotiation process. Let's proceed to the next section. About 25 minutes before the closing, the Nasdaq, which had been down as much as 0.72%, turned positive due to a short covering rally. If you look at the closing prices now, the S&P 500 rose by 1.10%, and the Nasdaq showed a sharp increase of 1.46%. So I'll show you several pieces of positive news that completely turned around the mood in the United States stock market like this. There are two pieces of news. The first is a small-scale rumor. So if I were to tell you that it doesn't have much impact, it's because Treasury Secretary Timfer hinted at a significant policy announcement. Just watch for a moment. President Trump has announced a major trade announcement, and it is expected to be an agreement with the United Kingdom. After the summit was announced in April, there was a lot of uncertainty. This will be the first time that the United Kingdom becomes the first country to sign a trade agreement with the United States after Brexit. If there's a first, there will be a second and a third. Many countries are expected to continue signing agreements, raising expectations. New York Times reported that President Trump will announce the outline of the trade agreement on Thursday, but the specific details have not been revealed yet. The United Kingdom has not commented yet. Now, there was even more important news than this, and here it is. The Trump administration is expected to ease artificial intelligence regulations. This news broke after the United States stock market closed, causing stock prices to soar as seen here. Let me explain the core content briefly. The Trump administration has announced that it will ease regulations on artificial intelligence expansion by reviewing and abolishing previous government restrictions on the private sector. Now, regarding these artificial intelligence expansion rules, under the previous administration, artificial intelligence exports were restricted by dividing countries into three groups. The first group consists of 17 countries which are relatively small in number compared to the rest of the world. And for this group, there are no restrictions, so they can freely receive artificial intelligence expansion technologies. The second group consisting of around 120 countries, faces restrictions. Exports are limited, with clear upper limits, indicating strict regulations in place. The third group, which includes China, Russia, Iran, and North Korea, has a complete ban on exports. This is how the system operates. The issue is that this second group consists of up to 120 countries, and obtaining artificial intelligence export licenses for these nations is extremely challenging in practice. This expanded artificial intelligence regulation was scheduled to take effect from May 15th. There are only a few days left. But then, news came out that the United States would suspend these expanded artificial intelligence regulations. As a result, stocks of major semiconductor companies like NVIDIA, AMD, Broadcom, and Intel rose sharply on this news. You can see it here. Let me briefly explain why the United States made this sudden decision. First, it's very positive. Many of you were curious about AMD's earnings results. This time, AMD announced that due to restrictions on the artificial intelligence chip market until 2025, their sales could decrease by more than $1 billion. That's what they said. So in the short term, if artificial intelligence chip supply to traditional allies like China or Europe expands, there is a possibility that actual performance could improve faster than expected. For companies like AMD, if artificial intelligence chip supply increases, their performance will likely improve in the coming quarters. This is how you should view the case of NVIDIA in particular, as it is representative. Especially in the case of Saudi Arabia and the United Arab Emirates, if the expansion of transactions becomes possible, there is also an analysis that sales in these markets could increase significantly by region. Now, but in the mid to long term, there is still considerable uncertainty remaining until the end. That's because of the uncertainty. Even if the artificial intelligence supply chain is completely restored, there is still a high possibility that restrictions on countries like China and Russia will remain. For reference, even after the artificial intelligence expansion rules were lifted, the semiconductor export controls imposed after 2022 and the restrictions on exporting manufacturing equipment to China are still in effect. There is another viewpoint to consider. As evident, export controls on advanced semiconductors to China continue. And another thing, the United States Treasury Department's plan has been announced as a three-stage system, and for countries like China, Russia, Iran, and North Korea, they are planning to apply much stricter and separate regulations. Therefore, through this kind of news, it seems that relations with China are improving, but in reality, the expectations are not that high, and that's how we are judging the situation. Today's final topic is about the current state of the United States stock market. A chief executive officer appears in today's United States stock market video. AMD Chief Executive Officer Lisa Su, a new addition to the Meet the United States Chief Executive Officer segment, appears this time. Now, after the announcement, Dr. Lisa Su will talk about AMD and we'll see how she explains things. If you listen to both, I think you'll find it helpful. That's all for today. Thank you to everyone who stayed until the end. We truly appreciate your support. Until we can all retire as United States stock investors, let's keep fighting together. Have a great day, and thanks.
AMD topped estimates, driven by a 57% year-on-year increase in data center revenue, and provided a strong forecast for the current quarter. Revenue is expected to be $1.5 billion, though, in lost revenue through the end of the fiscal year, as the United States limits the export of the company's artificial intelligence chips. Joining us this morning in a CNBC exclusive is AMD Chief Executive Officer Lisa Su. We were just talking about when we met Kramer.
When we met at our data center, this is our About Foundation, a company with outstanding performance in computing, and about China's export regulations. Hello, earlier in April, this is the core of our industry. Last February, there were 700,000 monthly active users and 1.5 million monthly active users. But even within that backdrop, what we see is an environment which is very, very favorable to our product cycles and all of the great technology that we have coming out in 2025. So we still see the opportunity to grow strong double digits in 2025. This is based on the overall strength of our portfolio.
Yeah, a lot of the bullish notes today. Take note of new chips, right? They will be debuting relatively soon, going to impact favorably the second half. And then Lean Ion's Lisa, Intel's shared donor.
Well, you know, let me take both aspects of it first. Shall we get started? We have a very strong product roadmap. We always said, and we've said it throughout the years, we have a very good product portfolio. This is what customers need right now. We see excitement in our data center portfolio. Today, our EPIC processors, our server CPUs are everywhere. Every major cloud provider is using our server CPUs. We have tremendous opportunities and growth in the enterprise market, where you see many of the Forbes 2000 companies also selecting AMD. And I think that's because we've shown them year over year that we continue to give them significant total cost of ownership. Yes, them to get their job done. We're also very excited about the artificial intelligence opportunity. I think artificial intelligence, I heard you guys talking about it as I was coming on. I absolutely believe we're still in the very early innings of artificial intelligence. Thank you. Extremely well for us. And it's a place where, again, people are upgrading their PCs. They want to upgrade to the best technology that has, great performance as well as great efficiency. And, that's what we have in our roadmap.
Lisa, you can't get away from the questions about tariffs, I'm afraid. I know on the call there were quite a few, and I'm going to go there as well because it is a key part here. I mean, do you have any expectations as to whether there will be sectoral tariffs or what they might be? Also would be interested to know whether you expect there was some pull forward in terms of demand as a result of fear of potential tariffs.
Sure, David. So look, I think we're all watching the regulatory environment very, very carefully as it relates to sectoral tariffs. We're in active conversations with the administration as they're thinking about both the short-term as well as the long-term policy. The long-term policy arc is we want more United States manufacturing. We want more manufacturing here in the United States. And, we are actively moving a bunch of our manufacturing here. We realize it's going to take some time. And I think that's the balance that has to come into play with sectoral tariffs, and we'll have to see how that comes forward. Now, to your question about the strength in our business relative to tariff pull forwards, I believe that, again, next is the news. Yes, our strength is actually very much focused on the strength of our product portfolio. I think the relative tariff impact was small, whereas the relative opportunity for us has been just end user demand for our products. But we're going to continue to watch this very carefully. And the beauty of the business, David, is I think we've learned to become very agile through all of the things that have happened in the semiconductor supply chain. And we're going to continue to watch all of these trends. Thank you very much. Make sure that we react appropriately going forward.
Yeah, you mentioned being agile as well on the call and said you have a good overall inventory position. I guess my follow-up would be, what does it mean to be very agile? What does that actually mean?
It means we have a great balance sheet. It means that we have great customer relationships. I think we plan for success. So we make sure that we are planning for a market that is robust to our products, but we will certainly adjust as needed if we see the macro weakening. Now, I have to say, for customer ordering patterns today, we're already, let's call it, a month into the second quarter. The month of April was actually quite robust. So it gives us confidence that people aren't making very short-term decisions right now. I think they're all wanting to ensure that we watch the environment, but recognize that we've been through many of these types of situations before, and we're able to adjust the supply chains and our inventory levels as needed as we see how. See you next time.